Welcome back to another episode. Today we're going to take a closer look at Nvidia, some discussions about DeepSeek, the Chinese company that is unfortunately not having the best success with AI chips from China, which could be seen as a very, very bullish case for Nvidia. We're also going to take a closer look at AMD. There are recent reports that Bank of America is very bullish on both AMD and ARM. Next, we're going to take a closer look at CoreWeave. The stock is down another 15%, breaking under $100 as I am recording. The CEO just shares some great insight. And then we have another kind of PowerShell company, WULF, that just announced an investment by Google, and the stock is up nearly 57% as I am recording the episode. The final topic we're going to take a closer look at is Oracle, dealing with some Google news. Nothing too crazy, but I do believe you should become familiar with. All this in today's episode, so let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
We can start off with Nvidia. Nvidia pretty much was flat like we talked about in yesterday's episodes. There were rumors about the Rubin delay. Luckily, Nvidia did provide some insight and said, look, these are rumors, are false. Now, what we're also seeing for Nvidia today is this. Financial Times reported that DeepSeek's next AI model delayed by attempt to use Chinese chips. So there are reports that DeepSeek was reportedly urged by Chinese authorities to train new model on Huawei hardware. After multiple failures, R2 training to switch back to Nvidia hardware while Ascend GPUs handle inference. I think that kind of just showcases maybe the strength of Nvidia. I've always talked about Huawei being somewhat of a competitive nature, and I always mention it's not a direct competition, but at least a small threat there for China. But we can see that maybe I was overshooting it a little bit, at least for the training side. For the inference side, obviously DeepSeek it seems to be using Huawei, so there is still that inference market that Huawei can take. But in the training, it does seem like there's no better player right now besides Nvidia. And it can actually be shown right now that DeepSeek, right, they made a huge announcement with their R1 model back in January, but ever since then, we haven't really heard much from them again. So maybe now that they are using Nvidia's H20 chips again, we might see an R2 come out from DeepSeek a little bit sooner. Now, next, I want to take a closer look here with Nvidia. So Nvidia is reportedly investing in Cohere, which is an AI company. I believe this is a Canadian-based startup, if I'm not mistaken. But Cohere on Thursday announced they have raised an oversubscribed $500 million round, bringing its valuation to $6.8 billion. Some of the investors seem to be AMD, Nvidia, Salesforce. So I don't think companies like AMD and Nvidia are investing in these to kind of build their overall AI portfolio. What's happening here is they're making sure that these AI companies, one, stay alive, but more importantly, it also helps AMD and Nvidia be in the front line of AI developers, so they can go to Cohere and say, hey, listen, what are you seeing in your AI workloads? How can we design our chips to maybe make better use for you? So it helps have AMD and Nvidia engineers in the front line kind of to be able to understand how the workloads of AI are transforming. And I think that's one of the main things, is kind of keeping this AI ecosystem alive and understanding where the AI innovations are happening, like that AMD and Nvidia can kind of tailor to that direction. Now, if you are enjoying the episode so far, make sure to hit the thumbs up and the subscribe button. I am trying to hit 75,000 subs by the end of the year, and I would truly appreciate if you can help out. Also, check out the pinned comments for special offers to my free newsletter, also fiscal.ai, and a lot of other great solutions as well. So next, we're going to take a closer look at AMD. The stock is down roughly 1.6%. Yesterday, the stock did see some nice movement due to those Nvidia rumors that now have been denied. Now, I do believe that's one of the reasons the stock saw a huge pull up yesterday and maybe a bit of a pull down. Nothing too crazy today. But this is a stock now with a market cap of about $300 billion. This is insane. Less than 2 months ago or 3 months ago, market cap was below 200 billion. So great opportunities if you have been following this channel. Now, what I want to take a closer look here with Advanced Micro Devices is this. Bank of America has kind of put AMD into their number one list, and it's kind of just a list where they have some of the top players. I think they pushed out Wells Fargo or some banking company, and AMD came in. But AMD continues to gain CPU market share over Intel, says Bank of America. Not only that, they also say ARM is kind of growing as well. So ARM also got some from a bullish sentiment from Bank of America today, even though the stock is down about 0.85%. I do believe it is kind of recovering a little bit from those lows after the earnings in August. We can see it kind of reached about 135 lows, now sitting at 140. Now, the actual concept that we're hearing here is the Bank of America, the bank revealed in a note that AMD posted strong CPU revenue share gain, up 120 basis points quarter over quarter to 29.5, and extending its 300 plus basis points gain in calendar year of 2024. And ARM is gaining strongly in servers. So they do talk about AMD. AMD is gaining more in the desktop market and not in the mobile market. And ARM actually fell in the kind of overall CPU space. It seems like ARM is not doing too well in the consumer market. And Intel is actually gaining a little bit more in the consumer market. But where AMD and ARM are actually doing a little bit better is in the server space. In total units increased 2% quarter over quarter for server CPUs, led by ARM's 15% growth and AMD's 1% gain, while Intel was flat. Now, the overall bank also believes that ARM and AMD will continue to gain market share, especially in the servers throughout 2027. Now, obviously, ARM's 15% growth seems amazing, but remember, this is starting from a very small basis. So from a very small basis, even growing a few millions of units could be a dramatic growth in year-over-year decline. So obviously, the numbers seem crazy, but when the market is dominated in x86, it is great to see that ARM excitement there. Now, CoreWeave is the next company we're going to take a closer look at. Stock is down roughly 15.7%. In the past 5 days, the stock is down roughly 22% from its year-to-date high. How this stock is down roughly 46%. This is wild. I am going to say now with a market cap of $50 billion, this is looking a little bit attractive to me. I wouldn't. If I was to be buying shares at these levels, it would be more of dollar cost averaging small position. If one is familiar with options, I do believe the biggest opportunity right now is I would rather sell a put. I've seen puts of like for 95s or lower in the next few weeks, selling for giving a premium of $7, $8, right? So I think that's probably my way about going about it. Maybe selling put options for CoreWeave, either close to the current price or maybe just a little bit below to give even myself a little headway. If I was to buy shares, it would be, like I mentioned, small dollar cost averaging. But I do believe here at 50 billion, it is becoming a bit interesting, right? It's not a load the truck moment in my opinion, but it is becoming a bit interesting. Now, I will say CoreWeave did... CEO actually went to Yahoo Finance, and he has about a 7-8 minute interview. If you haven't watched it, definitely recommend watching it. CoreWeave CEO pretty much says the following. He is an ex-Wall Street guy, for those that are not familiar. He's like, look, I understand what's happening. I look at the stock price. Obviously, lockup period is ending today. I expect some people to sell out. Obviously, they've been in the company and investing in this company for a while. Why shouldn't they get benefits for all the investments that they've made in the company? So he does expect kind of a sell-off. He also does mention he doesn't believe the sell-off is going to be in forms of insider as high as maybe some of the market might be expecting. And he truly believes that in the long term, CoreWeave will be a bigger returner over time. So very bullish. CoreWeave CEO, though, didn't confirm or denied if he was going to be buying or selling shares right now that things have gone down. So something you can keep a closer eye on, but he did have an interview discussing this. Now, earnings were great. I mean, it kind of showcased the overall growth of the company. The biggest bearish thesis here for CoreWeave, obviously, is that balance sheet, and that's something that has always been a thing there for CoreWeave. Now, one thing that CoreWeave did mention during the earnings is the biggest constraint in data center AI infrastructure right now is power shells. And I did an episode on that yesterday. So if you haven't looked at it, make sure to check it out when I talked about CoreWeave earnings. Power shells are pretty much the infrastructure of the data center, the actual building and the power solution. So pretty much that's what they are. They are a shell of power where you can just bring your CPU and connect it. And that's the biggest constraint in the market right now. Now, it's so crazy that just a day after we hear that, Terra Wolf, which is a company that kind of builds this AI residence, is up 60% on the day. The main reason is we can see Google just took about an 8% stake in WULF, and there is also a form of a 10-year lease with FluidStack. This is a power shell, right? This is what it's kind of the data center without the AI GPUs. I believe if there is a market that's going to be booming for the next year or so, is going to be these power shell companies. We've already seen it with a few players. We've seen it with WULF. We've seen it with Applied Digital. We've seen it with companies like Iron, but there's a lot of other players like this. And it doesn't mean they're all going to win. But if you guys want me to bring a list of, I know at least 10 companies in this market right now that I'm pretty sure no one's discussing. Again, these wouldn't be buy recommendations, but it would just be, this is the list of PowerShell companies out there. We'll do small deep dives. If there's something that you like, let me know in the comments below. So yeah, pretty interesting there with Terra Wolf. Congratulations to all shareholders. I actually talked about Wolf during the live stream a few weeks ago. Now, the final thing I want to take a closer look at is Oracle. So Oracle is pretty much flat right now. Oracle is kind of another one winning in the cloud space, but staying here with Google, let's take a closer look. Oracle offers Google's Gemini models to customers, accelerating enterprise agentic AI journeys. So customers will have access to highly performant, flexible Gemini multi-models via Oracle's cloud infrastructure generative AI services. Oracle will collaborate with Google Cloud on various Gemini model integrations across business applications. So 2 wins here. Obviously, Google expanding more of their Gemini models, which I think is bullish, and obviously Oracle winning in the cloud infrastructure space. Now, any of these companies that I've talked about, who would I be buying or would I be buying any? I think the only ones that I'm really excited about right now are Nvidia and AMD. I still would say all times right now in this AI space are very, very small dollar cost averaging when they go up. But I believe the bullish sentiment for them is there. CoreWeave is looking a little bit more interesting, right? That one is a little bit more risk, a lot more risk, but with kind of a sell-off sitting at now $50 billion market cap. This company is expected to do revenue of $5 billion this year at least. So it's trading below price to sales ratio of 10, which isn't that expensive in my opinion. Obviously, the cheaper the better, and I do believe the growth rate forward price to sales ratio for next year is actually going to be closer to like 7, or even lower than that. So CoreWeave's looking a little bit more enticing, if I may say. The other ones, nothing too crazy. It's just great news here in the AI market. Now, let me know if you do want that list. The comments below. If we can get this. If we can get a nice amount of comments about that, then I'll probably be dropping a video over the weekend. Take care, have a good day, and see you all next time.